Welcome to another lovely episode of J Forex House. And today's episode, I'm going to be teaching you guys about swing points. All right, so we're going to be talking about um, how to identify swing points within multiple time frames. Right, I know you guys know what swing points are, and within this video, I'm going to be educating you guys how to identify swing points that belong to the daily and swing points that belong to the weekly. Okay, so you have to understand that trading is a more multi-time frame um, system, so you have to be able to identify these structures within different time frames to be able to make use of them. For me, I use the weekly time frame for a different reason, and I do the same for the monthly and the same for the daily. So I'm going to be giving you guys some of my informations on how I do multiple time frame analysis and mainly identify the swing points from one end to the other on time frames. Okay, so first of all, on the monthly time frame, I pay attention to the trend. Majority of the times, I try to focus more on the trend and key levels of the monthly time frame, because you have to understand that a single candle on this time frame is equivalent to 31 days, all right, in total. And you have to just identify the direction of the candle for let's say a certain period of time. So all you have to do is just identify the direction, the trend basically of the market, and identify if it's resting within the swing points or a key level, which could be a major problem. So a key level is kind of like this intersection between supply and demand areas, and these are found within structures as flip zones. Right, supply and demand calls this flip zone, and some other traders call it whatever they want to call it, but basically it's just the intersection between two range. So you have a bullish structure. When there's a break of structure, you expect a pullback into the range. All right, that intersection where the swing point of the previous range meets the other one is called a key level. All right, sometimes on the candlesticks you might see multiple retests of these areas, and it serves as support and resistance to, technical analysis. So I pay attention to identifying those areas within the monthly time frame and also the trend, because I'm just trying to look for the direction of one single candle. Okay, so and then on the weekly time frame, I pay attention to identifying the structure. All right, so you have to understand that for you to be able to trade through the range, you need to identify the range it's coming from and the range is kind of trying to create. So you could be able to take advantage of that and also know the trend of the market. So what I do is I find the weekly structure, which is in line with the monthly trend, and then I try to pay attention to which part of the current range market is currently in. Right. So on the weekly time frame, you could see, we have this premium and discount of the range, and you have to make sure you are within a certain area when you're looking for buys or sell. Like when you're looking to sell, you have to be within premium, and if you're looking to buy, you have to be within discount. This is the law of supply and demand. So on the weekly time frame, I pay attention to these laws and trying to identify the structure, right, of the trend which I got from the weekly time frame. And then on the daily time frame, I pay attention to looking for basically the counter structure, because you need to understand that supply and demand is a little complex, because it goes into details of how you identify each of these zones. Okay, the way I might be saying it might make it sound very easy, but you need to also understand that you need to pay close attention to identifying these areas and how you do it them, because supply and demand teaches you how to do this in some way, and then when you go into details, you find out that these are broad courses and you need to understand a lot of things. Like, for example, you have the cause and effect, you have the premium and discounts, you have the Fibonacci levels, how they deal on supply and demand, and you also have the flip zones. So basically, these are concepts. Some traders just use the single method, just one of them, but basically these are all supply and demand tools that you use to understand the market. Okay, so on the daily time frame, I pay attention to the counter structure to the weekly. Okay, I try to find and pay attention to the counter structure to the weekly. All right, so few minutes from now, we're going to go to the live chat. I will show you guys some examples of this. But for now, I'm just trying to break it down so you know the criteria which I'll be looking for once I go to the chart. I'll be showing you guys how I identify these swing points on my chart. Okay, I'm going to be showing you guys on charts the difference between an internal and an external structure. Let's go down to the lower time frame, because you need to understand that structure, as I showed you in the earlier picture, moves in a pattern. So these patterns are what we're trying to identify on the chart, so we can be able to get a more better entry or a more precise point of interest. So on the weekly time frame, if you could pay attention to these points, these are called the swing points of the structure. Okay, so when you're trading or when you're looking for external structures, these structures are the most efficient ones to pay attention to, because these are now called the external structures. Okay, so what you have here, yes, is a break of structure, and this was a lower low. Right now, if you want to differentiate between how to find the internal structures within this weekly time frame, okay, and then to identify the daily point of interest and the 4-hour internal structures of this same range, when you go down to the daily time frame, what you will find is a bunch of repeated patterns, which is a similar method of which we identified the weekly structure. But as you can see, this would be bearish, because we're looking at the bearish range from the weekly time frame. So the time frame behind the weekly, which is the daily, has to be on a bearish range. If we are to say we're looking for a point of interest or the swing points of the daily time frame within this range. So if you're to do that on the daily time frame, we would, let's take this out and then identify from this point. So I'm using previous charts to show you without a replay, so you would understand how this works as a pattern. Obviously, I'm not doing live analysis, so I'm just teaching you guys how to identify swing points. Okay, so what you have here is in fact a daily swing low. This is not a weekly, because remember, this was a weekly swing low which was broken, right? So this you have would be an internal swing low. But as you can see, the structure is very obvious on the daily time frame, which is why we're going to be calling it a daily swing low. Okay. Now, what you want to do is identify which high within this range broke this low. All right. So that is how you're going to be able to identify the daily swing high within this range. All you have to do is look for the high in particular that broke the swing low. Now, if you pay attention, you will notice whichever high it is, it will not be invalidated until the intentions of the range is completed. And as you find here, we have this high. Okay, so this is one of the easiest way you can use to identify the swing points of multiple time frames. Okay, now as you can see here, you have this as the daily swing high. Now what you want to do is which low was the last low which was created after this swing point was invalidated, and that is where we have this low, not this one, but this one. Okay, because this was the last low that was created before an internal pullback was made. And as you can see, this pullback would be heading to clear out an internal structure. Now, for you to look for the 4-hour internal structure of this range, you have to now identify the daily structure of these points, which you can see is from this high to this low, because which is the range that invalidated the daily structure. So within this range, which high broke this low? From this point to this point, which high within this broke this low? You could find we have this guy. Okay, so if you are to be looking for an internal range to be liquidity, it is only liquidity, remember what I said, once the structure is broken. So as you can see here, this structure was broken to the downside, which makes this a liquidity point of this range. Okay, now this becomes the newly formed daily swing high, because it was the high that cleared out the 4-hour swing high, which was the inducement of whatever demand zone you find within the lower time frame of this point. Now, for you to find which
is the daily swing point of the range closest to the weekly area of interest. Let's make this green so we don't get confused. Okay, so our key study is from this point to this point. We're trying to identify multiple swing areas and how and why we call some of them liquidity and what makes them liquidity. So as you can see, I showed you what made this valid in the first place, which was the 4-hour time frame. Once this did its own job, which was to invalidate the daily swing point because we are bearish, it has to be validated because we have orders stacked up at this point, because those traders who got in at this point to sell, majority of them might be holding to take out this low. So this is a lot of tension right now on these swing points, which makes it an inducement for, which is like a reason for price to want to go to the upside, because an inducement is basically an attraction. So what do you think could be attracting the markets to pull back a little bit? Because we just cleared out the daily points, okay, and this is the daily range. And as you can see, this is still within equilibrium of the daily structure. So clearing at this point would be a very, very, very valid reason, for price to still go down, because this would be inducement, okay? And once this was done, you can see the candle closed below this. And if you go to my Telegram channel, and you could find so many of my replay charts where I highlight swing points and stop hunts. But if you don't know how to identify stop hunts, you can make use of my Instagram, because I have so many videos there which breaks down how to identify single candlesticks and how to use engulfings and how to identify a proper break of structure from a stop hunt. Okay, so you can check that on the Instagram, which would help you understand a lot of this I'm trying to do right now on the chat. But if you do already understand that, then just keep following up, and by the end of the video, you should understand this. But if this is still complex to you, all you have to do is watch it even slower for you to understand the concept I'm trying to explain to you here. It's very logical. It is not SMC pattern. It's not ICT or YCOP. This is pure structure. We're just understanding structures within multiple time frames, so we could get that area of interest we're looking for to be more precise. This is not 100%. This is just a more precise point of interest according to what we are seeing in the structure. So if you pay attention to this, this was the high that cleared out this low. Because if you look at the range from here to here, no major pullback was made into premium. Okay, if you say this is the daily low, quite all right, yes. But once the break of structure, price never really pulled back into this range. And if you pay attention closely, you could see we had no obvious 4-hour swing point within this range, which could be used as liquidity. So basically, there was no inducement. This is just an order block, which you can see got tested, or slightly tested, if I may add. And you can see we never had any liquidity, which could possibly pull price back up, or a reason for price to pull back up, because a lot of this was a very high momentum. A lot of traders will be waiting for price to actually pull back. So there's no reason for price to do that, because it will just get more trader in the direction of the trend. And the trend is heading to clear out the weekly swing low. And this is very, very close to the swing low. So we have a lot of people who would be interested in buying from this point. Okay, so which makes price going up an invalid point. All right, so there's no reason for price to go higher, and basically this is what I see on the daily time frame. So basically this is how you break down time frames. Okay, this is how you break down the swing points within different time frames and how you get your point of interest using the direction and structure. Now let me do the same thing for this point, or let's say a different pair. I won't want to go lower than this, so I would want you guys to do it yourself. Okay, so all right, so we had an analysis on this one. Let's not spoil that yet. It's still playing out. I think I also had one on this one, but I think that one already played out. Yep. This was one of the analysis I shared in the free Telegram channel. If you wish to join the community, link in the description. Let's not spoil this. I think I've not updated them yet. Let's look for another one. Okay. So on the weekly time frame, let's use the weekly. Okay.
Because remember what I told you guys, we have multiple time frames and they are all used for different purposes. Okay, so when you're refining the structure, it's advisable you go to the weekly because the monthly is what we use to determine the trend. Okay, so the trend and the structure are two different things, like I said earlier. So you have to understand that the role of the trend is different from the role of the structure. So you can't be picking both of them on the same time frames. We have multiple options, and for us to get a more precise point of interest, we have to optimize all time frames. So we leave the trend and key points on the monthly. We move down to structure on the weekly, swing point and structure. And then on the daily, we move down to point area of interest and counter structure of the weekly time frame. And then on the 4-hour time frame, we move to paying more attention to the supply and demand areas which we have on those daily points of interest. So I just gave you a quick summary of all put together so you know what I'm trying to do in case you maybe further the video or something. Okay, so we had a similar structure with GBP USD. You know, they're both correlated with DXY. So obviously we're going to be seeing a similar structure. But let's go to one from the past, not long, so we could be able to identify it on the daily. Okay, so we have this point. We have this high, we have this low, we have this high, we have this low, high, high. All right, so this is what we have on the weekly time frame. And you might be wondering why I did not mark this. Maybe, well, I guess you're not. A lot of you should know that already because basically you can see that was not the low that broke the structure. It was an internal low, which is more of a trap. And when you pay attention to the lower time frame of this, which we have marked, you can see that the swing points identified on the weekly still have multiple highs and lows within them. Now, for us to be able to identify the daily structure, we have to pay attention to the swing points that broke the weekly structure. Okay, so as you can see, this was a weekly swing low that got broken. Which high, broke this low? As you can see, this is the internal structure. So this would be our liquidity because this is an internal structure, right? So this would be the daily, and then this would be the weekly. So once the weekly is complete, price goes to use the time frame below as liquidity, to mitigate an area of interest resting very close to that point of interest. Okay, so we also have a break of structure here, which high within this range broke this low. We have this, and that is how you identify the daily. Okay, so the daily is invalidated once the weekly is broken, but the daily is valid once the weekly fails to break structure. If it doesn't break and then you have something like this, then it's a different case. But once it's broken, there's a high chance that price might not mitigate this. We'll use this as inducement. Okay. So if you find this video educative, do like and subscribe and check us for more updates. And I will be releasing more educative videos like this along the way so we could all get educated on how the system of trading works. Thank you very much for joining us today. Have a nice day.